Best performing ETFs of all time. The 2008 financial crisis has been followed by one of the biggest and longest-lasting bull markets in history. The decade from 2010 to 2020 saw the S&P 500 index catapult from 1.123 to 3.793, just short of a 400% increase. Several specific exchange-traded funds have enjoyed investment returns that have even outperformed the overall stock market's impressive gains. Hit the like, share, and subscribe button for upcoming videos. 5. Vanguard Total Market ETF. Price $194. Change $0.92, 0.47%. This ETF offers broad exposure to the U.S. equity market, investing in thousands of different securities across all sectors. One of the most attractive aspects of VTI, in addition to the extremely broad base of holdings and balance of exposure, is the price. This ETF is one of the cheapest products available, and the ability to trade commission-free within a Vanguard account further increases the appeal to cost-conscious investors. For those looking to minimize fees, VTI will fit right into a portfolio. One attribute worth noting, however, is the tilt towards large caps. While VTI includes companies of all sizes, the allocations to mid-caps and small caps are not significant. Those seeking more balanced exposure to U.S. equities may want to use VTI alongside more targeted products focusing on smaller companies. 4. SPDR Utilities Fund XLU. Price $70.50. Change $1.20, 1.67%. This sector SPDR is one of the most popular options for investors looking to gain exposure to the U.S. utility sector, a corner of the domestic stock market known for relatively low volatility and relatively high distribution yields. A fund like XLU might be useful for establishing low-risk equity exposure or for enhancing the current returns generated by the equity side of a portfolio. Like most sector-specific ETFs, XLU is probably most appealing to those implementing a sector rotation strategy or looking to establish a tactical tilt towards this low-beta sector of the U.S. market. Those building a long-term buy-and-hold portfolio will likely achieve utility exposure through broad-based equity funds, though the allocation to this sector can be relatively small. Investors should be wary of unintentional overconcentrations since many dividend ETFs and low-volatility funds have a significant slice of their assets invested in utility stocks. 3. SPDR Healthcare Fund XLV. Price $135.73. Change $1.80, 1.31%. This ETF is one of the most popular options for gaining exposure to the U.S. healthcare sector, and as such might be an attractive option for investors looking to tilt exposure towards lower-risk industries. XLV is among the cheapest ways to gain access to healthcare companies and offers impressive depth of holdings as well. XLE can be a good option for a sector rotation strategy or as a means of establishing a long-term tilt towards the healthcare sector. 2. Vanguard's S&P 500 Fund VU. Price $354.15. Change $3.98, 1.11%. This ETF tracks the S&P 500 index, one of the most famous benchmarks in the world and one that tracks some of America's largest companies. As a result, investors should think of this as a play on mega and large cap stocks in the American market. These securities are usually known as blue chips and are some of the most famous and profitable companies in the country. The fund is probably one of the safest in the equity world as the companies on this list are very unlikely to go under unless there is an apocalyptic event in the economy. 1. Invesco Trust QQQ. Priced $274.89. Change $2, 0.72%. This ETF offers exposure to one of the world's most widely followed equity benchmarks, the NASDAQ, and has become one of the most popular exchange-traded products. The significant average daily trading volumes reflect that QQQ is widely used as a trading vehicle, and less as a component of a balanced long-term strategy. Thank you so much for watching.